Have you ever wondered what would be the best way to invest $1,000? In this video, we will try to give you an answer to that, although it might be very individual how that capital is best employed. For some, it might be beneficial to invest in something in which you have already invested money, like, for example, if you already have your own business. It could potentially be best to invest in expanding what you already have. Others might find it worthwhile to pay off debt before doing anything else. Whichever situation you find yourself in, this should give you some ideas on how $1,000 is best spent. First things first, if you haven't already saved $1,000, you might consider finding a way to cut down on your spending or finding a way to earn a little extra on the side. You can find some advice on how to save money and potential ways to earn a little extra on the side in the video linked in the top right corner. Once you have the $1,000, you should consider paying off any debt you might have. Some loans have high interest rates, which are killing your cash flow and, in turn, impairing your ability to invest and achieve your financial goals. Some of the fast personal loans you can take have interest rates in the range of 35 to 40%, which is exceptionally high. You always have to ask yourself if you could achieve a higher return than the interest rate you are paying on your loan with your $1,000. Although it is not impossible, most investors would agree that a 40% return when starting out is unlikely. Therefore, your money would be best spent on paying down your loan with the highest interest rate first. As a rule of thumb, the normal recommendation is to pay down any loans that exceed a 4% interest rate. This is because if you invest your money, it is very likely you can achieve a higher return than 4%, thereby creating a positive cash flow. In general, there is very little debt that you should have if you are determined to achieve financial success, but there are exceptions to the rule. If you want to learn more about how to earn money with debt, you should click on the link in the top right corner. When you have your savings and your debt under control, it is time to look at where to invest your $1,000. One option could be to invest in low-cost index funds and exchange-traded funds, ETFs. This is an easy way to create a diversified investment portfolio. Both have broad market exposure as they typically aim to replicate the performance of a specific market index, such as the S&P 500 or the NASDAQ. This allows you to spread your risk across various industries and sectors. Imagine owning a bit of every company in the S&P 500. Some of these companies may file for bankruptcy, which naturally does not help your investment, but you cannot lose more than 100% of that company's value, and it will only make up a small portion of your entire portfolio. A large number of companies in the index will slowly grow over the years, giving you a steady return. Then there will be a small portion of companies that are going to take off. Some companies, with the right invention or discovery, can grow more than 1,000%, balancing out the ones that are going bankrupt and then some. If you had invested in the Vanguard S&P 500 index 10 years ago, you would have achieved an average yearly return of 12.21% with dividends reinvested. Although there is no such thing as risk-free investing, this is one of the more reliable methods to get a steady return. You might say that nobody has ever gotten rich from investing $1,000 in a low-cost index fund and leaving it there for 10 years. In fact, you would have accumulated slightly less than $3,200. However, if you change your strategy and invest $1,000 every month for the next 10 years, you would end up with around $240,000. As you can see, it makes a huge difference to invest your money with a long-term perspective. Initially, it may seem like it will take forever to accumulate wealth, but with the wonders of compound interest, it will pick up pace over time. In fact, the amount that took you 10 years to accumulate can be doubled in just 5 years. So if, after earning $240,000 from investing $1,000 every month for 10 years, you continue for another 5 years, you will end up with slightly more than $500,000. If you continue for another 5 years, you will have made just about $1 million. This way of investing is regarded as relatively safe, although we should mention that no investments are completely safe, and there is always a risk that you will lose your money. Before we continue, we'd like to take a moment to invite you to like and subscribe to the Billionaire channel. By subscribing, you'll stay updated with our latest content on wealth creation, investment strategies, and financial success stories. The Billionaire channel is dedicated to empowering individuals like you to achieve their financial goals and unlock their full potential. Whether you're looking for inspiration, practical tips, or expert insights, our channel offers a wealth of valuable information. So, hit that like button and subscribe to the Billionaire channel to join our community of motivated individuals on the path to financial prosperity. Don't miss out on our upcoming videos filled with actionable advice and inspiring stories. Thank you for your support, and now let's get back to exploring the world of smart investing and building wealth. If you are looking to make more money faster than the suggestions we provided with index funds, you could consider investing in individual stocks. One notable example of an individual stock that has provided significant returns over the years is Amazon. If you had invested in Amazon stock several years ago, you would have seen remarkable growth in your investment. For instance, let's consider the period from January 1, 2010, to January 1, 2022. During this period, Amazon's stock price increased from around $136 per share to approximately $3,244 per share. This represents a staggering growth rate of over 2,280% in just over a decade. Investors who recognized Amazon's potential early on and held the stock throughout this period would have experienced substantial capital appreciation. Of course, it's important to note that past performance does not guarantee future results, and investing in individual stocks carries risks, including the possibility of loss. Another example of an individual stock that has provided substantial returns over the years is Tesla. Tesla is a well-known electric vehicle manufacturer led by visionary entrepreneur Elon Musk. If we look at the period from January 1, 2015, to January 1, 2022, Tesla's stock price experienced an extraordinary surge. In early 2015, Tesla's stock was trading at around $43 per share. Fast forward to the beginning of 2022, and the stock had reached approximately $1,100 per share. This represents a remarkable growth rate of over 2,460% in just 7 years. Whether you lean towards a conservative approach of investing with index funds or you're more inclined to take risks and invest solely in individual stocks is entirely up to you. Typically, it's also advisable to adjust your investment strategy based on your age. Some may suggest that young individuals adopt a higher risk profile, including investing in individual stocks, while as you approach retirement age, the focus may shift towards bonds. Ultimately, the decision on how to proceed should be entirely yours. The popular Chinese proverb, "The best time to plant a tree was 20 years ago, but the second best time is now," carries a powerful message in the context of investing. It emphasizes that while the ideal time to start investing may have been in the past, the next best opportunity is the present moment. It encourages individuals to seize the current opportunity, take action, and not dwell on missed chances. By starting to invest now, one can begin the journey towards financial growth, benefit from compounding returns, and build a stronger financial future. This marks the end of this video. If it has brought any value to you, we would appreciate it if you could like and subscribe to our channel. Thank you for watching, and we look forward to seeing you next time.